Yep. So can we go one slide further to the overview, please? Okay, so this is what I plan to talk about. My slides are very minimalist so that you can lean back and listen rather than squint at the screen. I'm going to briefly take you through the underlying dynamics of Kenyan politics and the elections. Then I'm going to have a brief look at the two main camps that the political campaigns have coalesced into. Look at the current challenges that they both would have to address and what they promise to do. And then try to have a very quick look at how the presidencies would differ, if at all they would really differ that much. Let's go to the first slide, please. So Kenyan politics and Kenyan elections are a bit mixed martial arts and a spectator sport. So people are very involved and they are very, very noisy. But the noise is not always telling you the most important story or the most important things. So I wanted to highlight those dynamics, and this is with apologies to anyone who knows Kenyan politics very well, because you would obviously be aware of this. But for people who are not that familiar with it, I think it's important to understand the underlying dynamics because they haven't changed that much. So Kenya has no real political parties. This is no parties of substance. They're often referred to as vehicles here, and that's really what they are. So when Kenya had the transition from a single party to multi-party politics, the political party regulations were very weak. And that basically led to a profusion of parties, with established parties splintering into ever smaller groupings. And although they've been tightened up a bit with a new constitution that came into power in 2014, enforcement is really lax. So there are basically no established policy platforms that parties compete on. And there's a huge fragmentation in the political party landscape, which also makes the whole situation very volatile. So what these existing parties or vehicles usually are structured around is ethnic affiliation and personalities. So politicians and aspiring politicians will build on their ethnic community. There's some crossover, but it's still a very important structuring factor. And then they try to cobble together coalitions, because there's no single ethnic group in Kenya that can win an election on its own. So what you end up with is typically quite fragile patchwork coalitions with multiple parties. And this is problematic in different respects. So it's, as you can see, it creates a lot of volatility, and it also means that there's nobody who can really, there's no internal, say, party think tank, policy platform or anything. So there's very little substantiated competition on policies. And as I mentioned, it's also incredibly noisy. So we have what structures the political competition now, and this is something I'm asked about occasionally, as if there are any concerns about a renewed outbreak of political violence like we've seen it in late 2007, early 2008, where I would argue that this risk is not eliminated, but it's substantially lower, and partly because those international criminal court cases back in the day, although they were both ultimately unsuccessful, mainly because a lot of witnesses were unwilling to talk or unable to talk because they were dead. This is, if you are a sort of leading politician or a major politician who's caught up in one of those cases, it's just incredibly costly and inconvenient to get out of them, and also it just doesn't look very good. So I think that has sort of tempered a bit the potential for renewed political violence. I think the other thing is also obviously that that there was a learning experience from this. That, to how quickly an acknowledgement, even by despite the people who might be willing to push for violence, a general acknowledgement that this can spin out of control and get very dangerous and basically leave nothing for anyone. And then what we've seen in the most recent election is that the Supreme Court was much stronger. And so my anticipation is actually, if there's not a clear, even if there's a clear winner, there will be a court case. So this sort of de-stresses the immediate post-election period a bit. And then the last factor in politics is that money talks. Kenyan elections are incredibly expensive because you can't. It's very hard to win an election with good ideas. There's a handful of people who've actually managed to do that. But the sums of money involved, and this is not just on the presidential level, but all, basically all the elected officers down. And this is not just for, say, official campaign expenses for your posters and town halls and whatnot, but also just simply the sort of extracurricular spending that you need to make to convince opinion leaders to bring their voters along. And this has a sort of, this is something that has eroded things for a long time. So it's not a very recent development, but there's a continuous, I would say, continuous erosion here. And it also brings more dirty money into politics. So I think that's definitely a concern, that you need to have either access to vast amounts of money, and this may well be, illegally gotten money, or you will make promises to people that need to be cashed in after you're in political office. So those are a couple of the dynamics that shape electoral campaigns in Kenya, and I think that's important to bear in mind. Can we have the next slide, please? Right. So the current situation is has a little quirk, and that motivated the title for my presentation when I sort of drafted it. Is that we've got a really strong element of recycling here. So the two main contenders are the current Deputy President William Ruto, and his opponent is Raila Odinga. William Ruto has been Deputy President for President Kenyatta's 2 terms. So he's basically been in the office for 10 years. The origin of this was that William Ruto and Uhuru Kenyatta, in the post-election violence, were on opposing sides, with their followers involved in quite a bit of violence, and they both ended up in the International Criminal Court cases. And so it was a bit of a twist to the following election that they teamed up, which was quite clever, because they essentially told everyone that it was this famous slogan back in the day, accept and move on. We've moved on from the post-election violence, so everybody else can move on as well. It wasn't very popular in the international community, but it was a sort of, I would say, minor stroke of genius to actually team up. This had very little to do with, I think, actual moving on and substantially dealing with the issues back at the day, but it was very successful. And back then it was also understood that Kenyatta would lead the government for 2 terms, and then he would back his deputy. And they campaigned for a 2nd term. There was, less excitement back then, but the opposition took that election to the Supreme Court and challenged it. And the Chief Justice then ended up deciding, or the Supreme Court decided, that they will suspend the presidential election because there were too many procedural irregularities to really be able to tell who clearly won the election. So that was a bit of a milestone in Kenya's political development, because it did, even though in the rerun, which Odinga boycotted, Kenyatta won it, but it did point towards the court system and not the streets as a recourse if people are unsatisfied. So the next interesting twist came, I think, a good year into Kenyatta's presidency, which Odinga protested against, had himself sworn in as the people's president and everything. So he was very opposed it as much as he could, is that Odinga and Kenyatta reconciled with the famous or infamous, depending on where you stand, handshake agreement. And this was this sort of set us up for the current situation, that this was the beginning of the sidelining of the deputy president's position. So you now have this interesting situation that that you have a deputy president who is effectively in government but is campaigning as an oppositionist, or government in the doghouse, and an opposition leader, a long-time opposition leader who's effectively the opposition in government. And this also leads to the interesting quirk that William Ruto is. We'll get to that when we come to the challenges that Kenya currently faces. Is that it's obviously requires a bit of rhetorical gymnastics for William Ruto to say everything is really bad and he's going to make everything much better, because he can make everything much better after 10 years. And for Raila Odinga, who's effectively had access to the state system for, I think, a year and a half or longer, to say he also is going to make everything much better because he wasn't involved in creating that mess, even though he's been sitting quite close to the table for quite a while now. I will just swap the bullet points. So why does the incumbent remain invested? For Uhuru Kenyatta, there's I think an increasingly strong interest in ensuring that his preferred successor, Raila Odinga, actually becomes the successor, because he has quite openly betrayed his current deputy and would certainly be concerned about his family assets in the country. There's been in the past, I think, a tacit agreement in the transition from Moi to Kibaki and then Kibaki to Kenyatta that outgoing presidents would be left alone, but the situation might be a good bit more contentious. So we've had until quite recently a situation where opinion polls suggested that William Ruto had a fairly strong lead. And one of the interesting things is that he was very popular and continues to be very popular in Central Province, the part of the country that Kenyatta comes from, that is predominantly considered Kikuyu, who were also in the post-election violence, basically on the opposing side from Ruto's Kalenjin. So that has been, I think that's a testament to William Ruto's ability to manage his political campaigns, to work very strategically, and to build his networks. I should briefly say there's a couple of polling firms, and there's a whole bunch of methodological issues around all these polls that are being done. A couple of smaller companies are not necessarily reliable, so whatever you see in opinion polls, go with the large ones, compare the large 3 ones, and take everything with generous pinches of salt. So I'm trying to say this in a way that doesn't get me litigation. So if you want to massage figures to have your intended candidate win the election, you would have to make sure that your intended candidate, that the gap between the two is basically so narrow that it just requires a bit of fixing and not an outright theft of several percentage points. I think that today wouldn't work anymore. And so Raila Odinga, as the sort of ex-opposition leader, is currently in the position that he has a good bit of the incumbency, or the powers of the incumbency, behind him. A couple of months ago, had there been an election and had it been free and fair, William Ruto would have probably won that quite easily. This gap has narrowed quite a bit since then, which is also reflected broadly in the polls. And what's created a sort of bit of a change in the overall momentum was the nomination of the running mates. So William Ruto's running mate is also, I should say, because none of the 2 main candidates running at the moment is Kikuyu, and this is a large and influential group of the overall population. They both ended up choosing a Kikuyu running mate as a sort of very clear nod to Central Province, to say, look, we acknowledge your concerns, we acknowledge your, we acknowledge that you do want to be involved in a very leading position here. And William Ruto chose Gachagua, also a Kikuyu, but someone with a sort of quite parochial appeal, in not even across all of Central Province, but far more restricted. And also, interestingly, someone who in the internal polls for the best running mate did not come out on top. And then also has a couple of court cases for money laundering and stuff in the courts, minor detail. Raila Odinga ended up choosing Martha Karua, who's the former justice minister. I think she had a couple of other ministerial portfolios as well. Was in the post-election violence on the opposing side of Raila Odinga. Very, she's often described as the Iron Lady, so seen as very hard-nosed. But she's also has probably a far broader appeal nationally. She's by far not as tainted by corruption as both the main candidates and a lot of other people. And I think the fact that he chose a woman also was positively received. So a problem in positioning Odinga as Kenyatta's successor by Kenyatta is that Kenyatta effectively campaigned against him very energetically for very, very many years, vilifying him. And so turning that narrative around is difficult. And putting Martha Karua into that position, I think, has helped, has also energized his campaign and created a bit of a buzz. And you're beginning to see that reflected in the opinion polls, where I think with the three major pollsters, Odinga is now leading with a couple of points. So that's been an interesting recent development. Whether that can be sustained is a different question. As you can see, as I tried to explain, there's an enormous degree of volatility in this whole setup. I think what also makes Karua interesting is that for a lot of people who wouldn't necessarily want to vote for Ruto, but who are concerned about Odinga's governance and management ability, is that he could effectively lean back into a bit of an elder statesman role, which he does quite well, and leave a good bit of the governing and the day-to-day business to Martha Karua. And she would be, I think she would be considered more competent than Ruto's running mate. So another point I should briefly mention is that, as I said in the beginning, we're dealing with two party alliances. So there's they're the main parties they're literally belonging. So parties here have owners belonging to the main candidates, and then a lot of affiliate, associate, coalition parties, a lot of smaller ones. So what you have two problems arising from that. One is that in a lot of areas you have party candidates belonging to different parties of the same coalition competing against each other. So that can be problematic. And I think both sides are trying to manage that in the sense that they try to figure out which candidate gives them the more realistic chance to retain the seat for their coalition. But they also made a lot of promises, about jobs and appointments and everything. So in trying to manage this whole and not have people run off to be independents or change sides, there were lots of promises about jobs for boys and the odd girl, obviously. The other problem is that whoever gets the parliament essentially will also be a huge patchwork. So in the absence of policy platforms and with people from lots of different parties, you have a continued problem of fragmentation. Party discipline isn't much of a thing here. And that's sort of exacerbated by the fact that for a lot of votes in parliament, you need to pay cold hard cash if you want that vote. Can we go to the next slide, please? So Kenya is in a really difficult situation right now. And I think we've been sort of in the situation for a couple of months where a lot of people have just been wondering if the current administration is going to be able to kick the can down the road until after the election and then just basically leave whoever takes over then to deal with everything that is problematic. And a lot of the difficulties that we're looking at the moment were exacerbated by COVID, but actually predated. So it's easy to blame COVID and then Russia's invasion of Ukraine and the global fallout for the current problems, and there's certainly challenges, but there's been creeping and worsening vulnerabilities that definitely come from before these developments. So Kenya has an increasingly suffocating debt burden because Kenyatta's administration raised a lot of money and spent a lot of money on large-scale infrastructure projects that haven't translated into the desired developmental impact, but were hugely and insanely overpriced. Not all were ill-advised as such, but were certainly wildly overpriced, and moved the borrowing more towards commercial or quasi-commercial debt away from concessionary borrowing. Kenya is now spending a huge percentage of its revenue collection just on debt service. So that leaves considerably less funds available to, including even to keep the lights on. So we're not even talking about development expenditures, but actually recurrent expenditures. Then you have, as I said, external factors, food price increases, fuel price increases, which also translates into rising transport costs. So you're familiar with that whole inflation scenario that a lot of countries face around the globe at the moment. We've got another drought, so food security is an issue. The challenges I listed are sort of a bit more business focused, but there's a real humanitarian cost to this at the moment, and very little capacity in government to really address this. Kenya has, the government has spent an enormous amount of money on fuel subsidies, and that's running out because you can't sustain this, and has also led to some wobbles with the IMF. I'm still trying to find out if the recent postponement to the next disbursement is just an administrative hiccup, or if we're potentially looking at a repeat of the situation from before the previous election, where the IMF quietly just suspended access to the facility because, that sticking to the agreed targets just didn't happen in an election year. Corruption is a long-running and very, very entrenched issue, and it just undermines a lot of implementation of what would otherwise be sensible decisions or sensible policies. And so you've got this high cost operational environment. You basically battle with corruption at every other corner. And you've got, because the government is under so much pressure to increase revenue collection, you've got also had quite an erratic and unpredictable tax regime, where companies increasingly say, look, we can't sustain this because we don't, it's erratic from year to year, but also we're just under so much financial pressure that it just gets, that operating gets quite difficult. I'm not going to talk that much about the development of the shilling, and I'm sure Patrick will have more detail about debt as well. So I'm going to leave that to the next speaker. So when you look at the promises that both major camps made, as I said, there are no real policy platforms. So you're not dealing with an actual platform that you can expect when you vote this party into power. Typically, what happens is that whatever manifestos parties or candidates put out are very boilerplate developmental statements. And also, especially this year, I'm not sure if they were that late in the previous years. So for an election that takes place on the 9th of August, William Ruto's side released their manifesto at the end of June, and Odinga was, I think, 2 weeks earlier. Fact is that at this point, a lot of people, they don't read these policy platforms. A lot of the more emotional arguments are not necessarily related to what these manifestos say. So there's a sort of very much on my side, your side argument still going on. The IEA has done some really good work doing webinars, Institute of Economic Affairs, Kwame Owino and his team, to take these manifestos apart and raise relevant issues. So that's well worth checking out. They've got one coming up on the Kwanza Kenya manifesto on Thursday. But so I've pulled one quote from them that I absolutely love and I intend to use lots of times henceforth, is speaking about the Azimio Odinga's side's manifesto, saying those are platitudes that are hard to argue with. So the manifestos obviously go through issues that speak to people, in slightly less stressful times, but especially now. So looking at food security, at incomes, at healthcare, all those issues, and they address them. The Azimio manifesto, Odinga's manifesto, is not quite as detailed on research as the Kwanza Kenya, the Ruto manifesto is. And I have to say that Kwanza Kenya spent a bit more time analyzing the different issues that they speak about. So I'm not going to go through them in sordid detail because that would absolutely be beyond our time frame. But you have you have a lot of platitudes that are hard to argue with. That's one challenge. Also because it's it's not, you're not going to end up in that many detailed discussions. Actually, no, that's not true. There's quite a bit of effort to actually try and discuss these things. So a problem that both face is that they both have plenty of stimulus funds, funds for women, for youth, for that revolving funds in whatever shape and form they come in their agenda, and that is historically a bit problematic because you just add a lot of admin layers to this, and they've not been very effective. And also, what they both don't spend that much time on, and that's a sort of interesting thing about Kenya, is that the execution is a huge issue. Kenya is actually a country that has pretty, not always, it's not a 100% thing, but has often pretty good work in terms of policy. Kenya does have competent people, has intellectual resources. I mean, you do get bills that are unhelpful, like the most recent IT bill, but there's actually quite a bit of good work there. So what is difficult is the actual implementation, and that is a lot to do with the sort of very, very corrosive impacts of corruption. So you have an NHIF, for example, for the healthcare sector, that if you compare it to the neighboring countries is better. That is clear. But there are so many governance issues in how the organization is run, how the services are rolled out, that this effectively hampers that people will not get the full benefits that really they should be getting. And I think both manifestos, both sides, have spoken about how they're going to root out corruption and fight corruption and have independent institutions to deal with corruption. And I think that's pie in the sky promises, not just because both sides are so compromised, but also because this has been such a corrosive, such a long-running issue, and it really does affect policy implementation. So it's for me, the question really is irrespective of the depth of your analysis, is how are you going to get this on the road and make it happen? And then the other big challenge is that Kenya is sort of teetering along on the brinks of a fiscal and especially a debt crisis. So I haven't seen really convincing arguments how all these things will be financed in general. If somebody says, we're plugging the corruption loopholes, that's not a tangible concept for me. But also the sort of immediate challenge of what are you going to do when you get handed over this no expletives here, but when you get handed this mess as the next president, what is your immediate approach to dealing with debt and to dealing with the brokenness of the government? And all the promises that you say you will make of things that you will do in the immediate future, this is the fiscal year started already, so going to be another supplementary budget. Where do you actually think you will take this cash from? So I think those are things that I would most certainly want to hear, especially for this transition. I would want to hear a lot more about, because you need to tell me, if you say, we'll do reviews of policies and everything, chances are the policies already have a lot of what, not everything, but a lot of what you want to do. So there's that gap into the actual transition. Can we have the next slide, please? So I've been thinking about how would those two presidencies differ. And if you bear in mind that there's no real party with an actual policy platform. There's a fair chance that they might not differ that substantially, because a lot of the sort of policy capacity and everything, because it doesn't reside in the elected representatives, actually sits in the existing institutions, and that doesn't swing massively overnight. So there's a fair chance that there's not going to be, a sort of, I get sometimes asked, isn't Odinga an old socialist, and is Kenya going to be a lot more socialist? And I don't expect that at all. I don't expect huge swings in policies. What you would certainly have is that people would sort of rearrange access. So there were lots of promises of jobs for boys and the odd girl, access to opportunities, but also this is the sort of, I think, what you would summarize under elite capture, that the elites who are sort of closest to power would be reshuffled a bit. Both the main contenders are effectively part of the political elite, and they're both compromised. So I don't see a substantial difference in that respect. I think what we know and what we've also seen in the past few years is that William Ruto is more disciplined than Raila Odinga, who's known to not be a very organized manager. We've seen that in previous campaigns. So I think he might be more willing to take hard decisions that are required for fiscal consolidation early on, and there will be some hard decisions. But I think on balance, his administration will also be more authoritarian. That's sort of emerged as a trend already under the Kenyatta administration, and I think that would be a continued concern for civil society organizations who've faced quite some headwinds under the current administration, but also for the media and so on. I think since Odinga would be the first Luo president, that's not something that's going to improve governance as such, or make a tangible difference in, say, fiscal management. But I think it's a symbolism that with Kenya's history and the horror of the post-election violence in 2007, 2008, I think it's a symbolism that you can't underestimate. I think it would create a bit of a feeling of, we can sit at the table as well, even if that means that, our people are not necessarily doing any better than before, because the governance quality is not going to improve substantially. But it's, representation does matter. And I think that was my last slide, no?
Okay, next slide. Okay, Patrick, over to you.
Sure. Thank you, Andrea, for that enlightening overview of the political side. I'm going to delve just very quickly into some of the macro issues that Andrea touched on. Andrea, if you could go to the next slide. Thank you. So Kenya, amongst its EM peers over the past decade, really has been an outperformer in terms of growth. Growth has averaged about 5% in the decade pre-COVID. And this is in the top 15 for all emerging and frontier markets over that period. And it's projected to average, per IMF estimates, about 5.5% over the medium term. However, much of that has been driven by large-scale public investment, which Andrea touched on, which has been largely responsible for the big ramp-up in debt that we've seen. And I think there's a clear need to shift away from a public investment and debt-driven growth model to something that's a bit more sustainable and private sector focused. And I think the chart on the right really is illustrative of some of the shortcomings of Kenya's growth model. You've seen exports have over the past decade and investment slowly ticking down. And that encompasses both private and public sector investment, with much of the decline focused on the private sector side of things. So I think there's clear competitiveness issues in the Kenyan economy that its investment drive has failed to address. And moving forward, there's a need to switch to a more sustainable growth model. Andre, if you can go to the next slide, please. The good news for Kenya is that while inflation has risen and now sits just above the top end of its 2.5% to 7.5% inflation target, the rise has actually been much less pronounced than it has been in many emerging markets and most developed markets, for that matter. So inflation is about 7.9%. Much of the rise has been driven by higher food and fuel prices. There's also some rise on the core front. So it's been broad-based, but I think less pronounced. That's allowed the central bank to be a bit more conservative in its rate hikes in an environment where many emerging markets for the past 24 months or so have really been proactively hiking rates. The Central Bank of Kenya was able to stay on hold and just recently hiked by 50 basis points during their last MPC meeting. I think there's a risk of them falling behind the curve and a need for more tightening as we move into the second half of the year. But even when you compare its real rate, which has fallen into marginally negative territory, about negative 0.4%, this is still about 5 percentage points higher than the average across about 60 frontier and emerging markets that we track. So I think inflation, while a concern in Kenya, has been less of a pronounced risk. Andre, next slide, please. That said, the fiscal, I think, clearly quite concerning. We've seen public debt rise sharply from about 36% to 67% of GDP over the past decade. The IMF assesses Kenya's debt stock as being sustainable, but with a high risk of distress. And interest payments absorb now well over a quarter of government revenue, which means that the runway for Kenya to turn this ship around, it really is running out. And I think moving forward for the next administration is going to be, I think, a do or die moment. The chart on the right shows Kenya's failure to deliver on its fiscal consolidation plans. I think for the past 5 or 6 years, they've really put forth ambitious budgets that aim to consolidate the deficit to 3 or 4% of GDP over the medium term, but consistently have missed their targets both on the revenue and spending front. And you can see almost every year the budget deficit gets revised up considerably compared to the initial estimate. They broke that trend in fiscal year 2020-21, which was the first year of their IMF program, and actually exceeded budget targets by about 0.5 percentage point of GDP, which was, I think, a very encouraging trend, especially against the backdrop of COVID, when most emerging markets and developed markets were seeing a large blowout in their deficits. However, last fiscal year, in the year that just ended last week, we saw about 0.5 percentage point of slippage relative to IMF targets. And just for context, Kenya entered an IMF program about a year ago, which is due to run through mid-2024. They missed their target by about 0.5 percentage point of GDP, which I think is unsurprising in a pre-election year, but also encouragingly was due mainly to one-off spending items like import of COVID vaccines and restructuring of state-owned enterprises. So that was all accommodated within adjusters to the IMF program targets. However, more discouragingly, we had another supplementary budget a couple weeks ago, which added another 0.7% of GDP to the budget deficit, and means that the starting point for their consolidation plans is now much worse than one had assumed about a month ago. And I think could be the reason behind the delays we've seen to IMF program approval. They received staff level agreement for approval of their third program review in April, but we've been awaiting board approval, which will give way for disbursement of about $250 million of funds. We've been awaiting board approval now for 3 months, and I think this shows some clear disagreement on Kenya's fiscal targets. And perhaps even more importantly, I think investors and markets have been willing to give Kenya the benefit of the doubt. While debt was increasing at a rapid pace, I think there was a perception that this was feeding into growth-friendly investments in infrastructure, physical and human capital, and underpinning what was really, world-beating growth for Kenya for a decade or so. I think both with the public debt in Kenya reaching such high levels and global financing conditions tightening so severely over the past couple months, investors are no longer willing to give Kenya the benefit of the doubt. And once the new administration takes over later this year, I think really it's going to be a make or break moment where they have to hit their fiscal targets. They have to keep the IMF program on track, or debt will continue to balloon and reach unsustainable levels rather quickly. Next slide, please, Andre. On the current account front, we've also seen some deterioration. We saw some consolidation over the past couple of years. The current account deficit has been endemically high in Kenya due to their large import bills, average almost 7% of GDP in the decade pre-COVID. And we saw some consolidation to below 5% of GDP in 2020 due to imports contracting, and due to about 5.5% in 2021. It's projected to rise this year on rising commodity prices, so oil and food, which has, of course, pushed out their trade deficit. But actually, compared to most other emerging markets, the increase in the current account deficit isn't projected to be that large. Most estimates are around 6% of GDP for this year, which, again, is below Kenya's historical average. And actually, thus far this year, the rise in the trade deficit has been more than offset by increasing remittances, which are rising for the second consecutive year now, at a clip of about 20% year over year. So this, that's the gray line on the top of the left chart, has been an important buffer for Kenya. That said, reserves, while buffers aren't alarmingly low, it's about 8 billion now, which is equal to 4 months of trailing goods and services imports. When you compare it to Kenya's large external financing needs, which we define here as the current account deficit plus public external principal payments, actually are quite low. So they cover less than 100% of their annual gross external financing needs, which means that without access to the market, reserves will continue to slowly bleed down. And you can see the pattern over the past 5 years where reserves slowly trickle down and then see large jumps. Those big upward jumps are when Kenya issues Eurobonds in the market. So their external financing flows in terms of direct investment and foreign portfolio investment are actually negligible, and have only averaged about 1% of GDP over the past decade. That means they've funded most of their current account deficit via government borrowing. And against the backdrop where yields have increased so severely and they don't have access to the market, that's going to become problematic. Next slide, please, Andre. And this just sums it up compared to some other emerging markets with existing Eurobonds. We define here the top right quadrant in both these charts as being countries at high risk of debt distress if external financing conditions remain tight. And basically what we're doing is plotting the Bloomberg Emerging Market Sovereign Index spread on the y-axis versus gross external financing needs as a percent of GDP on the left chart and as a percent of reserves on the right chart. And countries with large gross external financing needs relative to their economy and relative to their external buffers, and with spreads over 1,000, which we define here as being locked out of the market, are going to have to find alternative ways to fund their current account deficits and external financing needs. Otherwise, they'll be at risk of debt distress. So Kenya doesn't stand out as being at the highest level of risk. I think Pakistan, Tunisia, there's a number of other countries that look slightly more concerning than Kenya, but you can see Kenya is very much in that high risk camp. Next slide, please, Andre. One issue for Kenya has been their commitment to exchange rate stability. So while the central bank, claims that the exchange rate is more or less freely floating, it's pretty clear that it's been heavily managed. So the shilling, despite this increase in external imbalances, is only down about 3.5% this year, which is less than the emerging market index. And we've seen anecdotes lately, which are quite concerning, from local manufacturers of FX shortages and the emergence of a parallel market, which the central bank vehemently denies. But I think it is the first worrying sign that Kenya's external imbalances might be getting out of control. And the chart on the right takes a longer term perspective. You can see over the past 20 years, we've seen a pretty steep appreciation of Kenya's exchange rate in real effective terms. Now, this has led to an overvalued shilling. The IMF's latest estimate in 2020 estimated an overvaluation of about 4 to 12%. And it's probably increased by a bit since then, given the widening of the current account deficit. So there's a clear need if Kenya is unable to restore market access to allow the shilling to act as a shock absorber, which the government so far has shown very little willingness to do. Next slide, please. And this shows the summation of all these risks from a market perspective. Kenyan Eurobonds have been a notable underperformer this year. Its spreads to US Treasuries at an index level have widened by 740 basis points year to date versus about 140 basis points for the Bloomberg EM aggregate, which means that, from a level of, compared to 6 months ago, the spread to its peers on average has widened by about 6 percentage points. And, against a backdrop of in mid-2020, Kenyan Eurobonds yielding less than 6%, we're now seeing its 2032, its 10-year bonds yielding almost 14%, and an inverted yield curve, so the shorter end yielding even higher. Its 2-year bonds yield 17%. So this is showing a very high risk of distress. Now, here at Tellimer, we think the increase in yields has outstripped what's justified by fundamentals, but also acknowledge the fact that Kenya, due to the issues we discussed before, really is at an inflection point where either next year the new administration delivers on its fiscal promises and market access is restored, or if not, where debt distress and restructuring becomes increasingly inevitable. So we have a buy recommendation on Kenyan Eurobonds, but I think with an important caveat that it is very much in the high risk bucket when you're looking at countries who might be at risk of defaulting in the next 12 to 24 months. And just if I can add one last thing, I think we agree broadly with Andrea's point that there's not going to be a big range of a big policy difference between the two candidates. But from the market and bondholder perspective, one worrying statement we saw out of Odinga was comments about debt restructuring. Now, it's still unclear at this stage if he's referring to something that's more of a NPV neutral refinancing exercise, or if he's actually hoping to include private bondholders in a more thorough restructuring, maybe under the common framework like we've seen in Zambia. But if he ends up winning and pushing more aggressively for a restructuring of Kenya's debt, then there's clearly still more downside risks that need to be priced in. So while we think that from a valuation perspective, bonds are now attractive, there's a slew of downside risks that could still materialize over the next year. That's it for me, Charles, so I'll hand it over to you.
Thank you very much. Next slide, please, Andrea. Okay, we now have a few minutes for Q&A. Andrea, there are a number of questions. I wonder first whether you have any comments about what
I think I can take all three if I... Okay. Are they visible for the rest, or should I briefly repeat them?
Read them out.
Sorry. So Subash says, during my visits to Kenya, I've become increasingly impressed by acumen, style, and ability of Kenyan business people and managers. This sets Kenya apart, as I see they also have strong influence in neighboring countries. It is also a growth top 20 economy. Are these not important ingredients for an emerging African country? So yes, this is. I think this is one of the things that makes Kenya so interesting. It's not as donor dependent as a lot of other countries, and it's got a lot of resilience in it. And that resilience, I think, to a good extent comes from its private sector. So I think there are two elements to this. One is it depends what you're looking at. So at the moment, there are a lot of people in Kenya who are under incredible hardship. And I think you can sort of superficially talk about government bond yields and returns on the stock exchange and everything. But there's also a really, really large number of people who are really struggling at the moment, who are looking at, can they still afford food? Cooking oil is insanely expensive. So I think it's important not to completely ignore this over macro data. And not just in an election period. I think Kenya's private sector is certainly punchy. is very resilient. And also, I think a lot of the EAC integration has actually been driven not so much by governments, but by corporates, a lot of them Kenyan, who've built their footprint across the region into DRC, who are trying to basically take a bigger footprint globally. So I think that is an absolute asset. You're entirely right with that. And I think in my analysis, maybe that's also a downside from being an analyst. Usually people are more concerned about downside risk. If there's upside risk, they're not that upset about it. But with the assets that Kenya has, and that includes a quite punchy private sector, it would be fantastic if they were given a more enabling business environment. And a lot of businesses at the moment are really struggling with the dollar shortage, with the erratic tax policy, with what they often feel is a predatory tax regime. There was some effort that was then people sued against it, was taken down. There was some effort to, for example, have a minimum turnover tax, so that you still pay turnover, you still pay tax on your turnover even if you make a loss. So things like that do push even the strongest corporates, put them under enormous pressure. So I think yes, definitely lots of assets, but there's so much potential that basically goes unused, would be my shortish answer to this. Nicholas says, you mentioned Kenya used debt to pay for large infrastructure projects which were overpriced. Which are you referring to? And against which benchmark are you comparing their costs to say they were overpriced? So the one of the sort of biggest projects, biggest white elephants here is the standard gauge railway, and there are multiple levels to this. For starters, there were feasibility analysis in the beginning that in order to improve Kenya's railway infrastructure, it would have made a lot more sense to rehabilitate the existing old narrow gauge railway. The costs would have been, I think they would have been in the hundreds of millions and not billions as they ended up. And so the Kenyan government ignored that. An important point here is that the sort of by global standards, the railway itself, the railway line from Nairobi to the coast is actually quite short. So for cargo, it doesn't matter much. And for obviously for passengers, it would be nice, but it's not as if you're trying to cover 2,000 miles or so. And then a lot of these, the standard gauge railway for one was not only single sourced, but the feasibility study for this was also done by the same company that later got the contract to execute it, which I think in international contracting is also a no-no. And then, you've got such an entrenched level of corruption that basically every single procurement corruption of goods and services is inflated. That goes down to, like if you want to buy a box of pencils, as a government, then you will still, these things come up anecdotally every once in a while, that government buys pencils instead of 30 shillings for 3,000 shillings a piece. And for a lot of infrastructure projects, or generally where land is involved, so this is also roads, railways, the land compensation rates are insane, and there are other ways of manipulating this, pieces of land being sold twice and so on. So you can have that technical discussion over what does Kenya need to improve its transport infrastructure, but then when you settle on a project that is in principle sensible, there's multiple levels after that where the price, the money that needs to be spent just goes up enormously. And then the third question was, will this present day civil, social, electoral process procedure enhance social, economic, political publics? I'm not quite sure what that aims at. I would read that as if the involvement of civil society is going to improve the socioeconomic outcomes. I think civil society involvement is generally good, and this was also part of the idea of devolution. Kenya has since 2014 has 47 county governments that basically replicate a good part of the government structure that the national government has. So a lot of the policy responsibility, state with a national government, but each county has a county government. They can make some laws, they can raise their own revenues and everything. So one problem here was that a lot of corruption was also devolved, but the benefit is obviously that you do bring government closer to the people, and so there's closer involvement there. And I think for all the sort of noise and the messiness of Kenyan politics, the media are quite active, and Kenyans are also very, very active on social media. That has all the usual problems that you see anywhere in the world. That it's being misused, that there's misinformation, but there's also a lot of very robust efforts trying to, for example, monitor parliament, to have accessible debates about economic policy and this. So I think that overall image is so complex that it's hard to find a very simple answer to this. But it's also, if you come to Kenya, you'll probably, if you're a bit involved on Kenyan social media, you'll probably see that generally people are very involved and very vocal, and will challenge you.
Okay.
Should I take the next ones as well?
Yes, please.
Okay, so what is the driving force behind the East Africa Federation movement? I think this would refer to the East African Community, probably, which is the regional bloc that has Kenya, Tanzania, Uganda as the founding members, then had the accession of the Francophone countries, Rwanda, Burundi, then South Sudan, which wasn't quite that successful because South Sudan is South Sudan, and then recently the accession of the DRC. So how is it perceived? I think it doesn't occupy the general. I hope there's not an actual East Africa Federation movement, because then I'm talking about something else. I think the Kenya, as I've seen that in terms of trade integration, everything is probably one of the most advanced regional blocs on the entire continent. As I said, I think a lot of what drove the integration was actually private business over governments. One of the challenges is that the EAC as an umbrella body itself is not very strong. So you've got repeat bickerings over border trade between, say, Uganda and Rwanda, between Kenya and Tanzania. And it's usually not the EAC that, as an umbrella body, that resolves this. So that remains a challenge. But business is quite a driving force in this. And I think the DRC joining the EAC is going to be very interesting and quite risky. But that's probably a subject for another day. We've still got some sort of, I think, old animosities between Kenyans and Tanzanians in the EAC. But other than that, I think people would generally, Kenyans are, try to work across the region. They're often imported as teachers or so. Professionals try to work across the region. So that's a bit sort of, that can be a bit hit and miss. That free movement of labor hasn't been entirely realized. There's some squabbles over where lawyers can work. But I think on the continent, Kenya is not doing too badly. There's a question about post-election violence if the wrong man is seen to win. Both candidates are not Kikuyu. They both have a Kikuyu running mate. Yeah. As I mentioned earlier, I think there was a learning experience from the post-election violence in 2007, 2008. And also there was certainly the inconvenience of the ICC that is, quite costly and inconvenient to get out of and just looks awkward if you are one of the people dragged to the ICC. And then also finally with the court challenge of the previous presidential election, I think there's a sort of pressure valve there that people will be expected to use the legal means first and foremost. And I think that's that while I expect the situation may well be tense in parts, I think the risk of a repeat of 2007 is lowered.
Okay, perhaps Patrick can just take the one on default risks and what would trigger it and when, and then Andrea can comment on it as well. Patrick?
Sure. So, there's two dimensions to default risk in Kenya. One is external, right? I mentioned the sell-off in recent months has been quite severe in emerging markets as a whole. we now count 28 countries that have dollar bond yields over 10%, which is quite remarkable and the highest we've seen since the global financial crisis in 2008. And we count 16 countries, or 25% of the Bloomberg EM index, with spreads over 1,000 basis points, which we would traditionally say means you're locked out of the market. Kenya's in that bucket, right? So in the meantime, given their large external financing needs, they're going to have to find alternative sources to plug that gap and prevent a drawdown in reserves. Now, when you compare Kenya to recent default cases like Zambia, Sri Lanka, public debt is much lower. It's about 70% of GDP compared to well over 100 in both these countries when they defaulted. And reserve buffers are still much higher. They're about 4 months of import or a year's worth of external payments, which compares to 1 month of import and a small fraction of external payments for recent default cases like Sri Lanka and Zambia. So that said, it has a bit of runway. But in terms of trigger, I mean, assuming the external backdrop stays tight and Kenya's locked out of the market, I think if they show slippage on fiscal targets as we head into 2023 and the IMF program falls off track, this will remove some of those additional financing sources that Kenya might otherwise have access to paper over the cracks. And while Kenya has some runway, if it still doesn't have market access, if it is unable to plug the gaps with multilateral and bilateral sources, I think default becomes a real risk, 12 months on. So, that would be the trigger, I think, is just missing on fiscal targets and potentially the IMF program going off track.
Okay, Andrea, do you want to just comment on that, or do you have any points on that? Andrea? You're on mute. Do you have any comments on the issue of debt?
Sorry, no. I think that's. I think it's a messy situation that was sort of been pushed ahead and ahead and ahead. And what does concern me is that basically borrowing to keep the lights on. And Kenya said they've abandoned the plan to issue a Eurobond just now, but would look for syndicated loans, and that would be less transparent and possibly just as expensive or more expensive. So it's whoever takes over the next administration certainly has a massive problem on their hands.